Welcome to Bears in Excel. Today is Thursday, April the 25th, and this is a quick hit on the indexes. And I was doing a little checking beforehand. Um, Very nice. The Dow up 24.5 points today. Very lackluster by the close. Very nice. We were leaning bearish today, and while it wasn't a negative end result for the day, I do think that today was pretty darn bad for the bulls. For one, we have an inverse hammer at the top of a possible range, and we are coming in on getting really high on the fast stochastic. It has a little farther to go, sure. But this secondary reset towards the top is about done. CCI going sideways, RSI barely up on the MACD histogram, and sideways, actually slightly down on the MACD itself. This is not what the bulls want. If we have a lower high put in today or tomorrow, this is going to roll over and be really darn ugly because we will have a retest of the previous low. So I would really consider this a good day for the bears. Sure would. Going on to the 60-minute time frame just to see if we are poised for movement down. And as we can see, yes, we have finished the move to the upside on the stochastics. We're rolling over on essentially everything. The RSI picking up by the end of the day. But this is, negative divergence in the MACD histogram. The MACD is rolling over, getting a bearish cross. 14-day RSI moving average is pointing down. This is bad. This is really bad. And a little bit of a head fake too, because at the highs of the day we had topped this previous high back here. But this is poor. This is a poor setup for the bulls anyway. Going on to the Dow Jones transports, just because we've been hitting those lately. And it did pierce the major price consensus level today. It did close above the lower price consensus level. But all in all, this is really a do or die moment. We have these descending highs, and spacing-wise, size-wise, it makes sense that it would turn at this time. Is it all negative? No. You have ascending MACD histogram. You have the MACD trying to get a bullish cross. But at the same time, you already have the fast stochastic pretty darn high. You can see that it almost mirrors the last hump that it had. And that's exactly where you had the last tumble. So the 14-day RSI moving average is already low. It's not pointing up. A movement down on the stochastic should be with some gusto, since we do not have the 14-day RSI moving average innocent, and it is at the dead low. So definitely a danger area here. Definitely. Going on to SPX. Very nice. And amazingly enough, this one, the Dow was in the lead, and today the SPX was in the lead. And it got really close to the previous high, or the high, at its top. So not as bad candle-wise, certainly not as bad. But topping area in the heat map getting pretty darn good today. The stochastic's pretty darn high, and just like everything else, this is a secondary reset. We just had to see this turn down. The 14-day RSI moving average is still moving down, so that should tell us something right there. Not all is bearish. We're looking for a bullish cross on the MACD. MACD histogram still going up, but this is pretty darn precarious. And if we are having a double top type incident or just shy of, this is the perfect level for it to turn down from. Does that mean that it can't go and break out the high? Well, of course it can do whatever it wants. It certainly went farther than I would have thought on the video last night. But that is what it is. I'll look at the 60 on this one also, just to see I think the 60 last night was in pretty good alignment for a move down. Matter of fact, I'm going to go back in time just to see what we would have seen, which would have been right here. And yeah, we have very good confluence for the move down as of last night's video. And if we move forward in time to the close of today, we can see that things are underway. Stochastics moving down, CCI moving down, MACD histogram and MACD starting a bearish cross. Unless this were to reverse tomorrow and get yet another lower hump or something, this thing is poised very nicely on the 60 for its decline. And we did see the start of that today, even though that was mitigated by the open. But anyways, I think there should be some follow-through to that end. Last night we didn't have the 14-day RSI moving average pointing down on the 60, but now we do. Very nice. Moving on to the VIX. Yesterday we had a doji star. Today we have yet another doji star. This one actually being nicer. It did pierce the lower price consensus level, but we still have a bottoming area here. For all of the run up this morning, this was pretty darn strong. It did very, very well, which kind of was giving me a little tell early in the day. Beyond that, we already have the fast stochastic turning up. We have the CCI leveling out. We have the RSI leveling out. MACD histogram still pointing down. 14-day RSI moving average going sideways. But overall, a very strong, very good showing by the VIX. And this one in the 60 should want to go up if it's going to, jive with the Dow and the SPX. And it is. It's poised very well for a move up. The only thing that I don't like is it moved so far on the CCI. It's already above the 100. That is a little bit of a problem to me. But beyond that, it looks pretty good. Going on to IWM small caps. Assuming I can find it. Just like so many other things, the spacing and the candle seems to indicate that this is a great time for this to turn down. A great time for this to turn down. It's so similar to the Dow and SPX, I guess there's no real need to rehash. But nice blip in the heat map, and it just looks nice to me. Notice the compression of the long-term moving average bar. It has lost almost half of its strength. Almost half of its strength. That's quite a chunk. Another down move into it could be enough to get it down to the 25%, or maybe even collapse it altogether. Very nice. Quick hit on GDX while I'm here. GDX having that revised uptick yesterday, which was spelled out in the daily running thread, and it was accomplished today. It came really close at its high, well, pretty close, to resolving the original uptick, but it did fall short. So that one is done, but the revised was met. And met within 1 day. That's pretty nice. Pretty nice. And it looks like this secondary reset is going to be coming to an end. I was not sure if it would be able to finish this move out and have to move down and finish off the 14-day RSI moving average before the 14-day RSI moving average leveled out. But it looks like, to me, the odds are very good that it will not have leveled out by the time it turns down. And going on to SPY to look at our volume information for the evening, since we do this every night. And it did something that I was concerned about last night, which was whipsaw on the volume-weighted MACD, turning red once again, giving us 3 reds, 2 greens. The 2 greens are the majors, the 3 greens, or the 3 reds are the minors. The on-balance volume did not tick down today. But accumulation distribution, how much room is left? Not too much. On balance volume, how much room is left? Not too much. I think that they are going to be in trouble very shortly. Look how much room is there. Look how close it is to the top. Beyond the whipsaw are the other two miners in a problem area. Dual volume flow? Nope. Volume price trend? Nope. So I definitely still lean towards the bears having the advantage at the moment. They can always fumble. I mean, they fumbled it so many times before, it's disgusting. But I'm just going to call it like I see it, and maybe I'll be proven wrong tomorrow. But until tomorrow, that's what I believe. As always, all investing decisions are your own. This chart and video for entertainment, educational, and consumption of time purposes only. Thank you.